This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Well, in case you're wondering why just two of us, well, there are not just two of us. Hi, good morning.
Yeah, morning. Don't be worried.
There are three of us. And let me introduce Sonia, who's joining us from the Garden City? The beautiful Bangalore. Sonia, hi, good morning.
Hi, Prashant, Nigel, good morning. Absolutely. I'm in Bangalore for a couple of days this week. So, Nigel, morning to you as well. I mean, as you know, right, the weather is great in Bangalore. The food is amazing. So, lots to look forward to. But back to you guys in the studio.
Absolutely. Is the weather ain't bad here in Mumbai as well, right? I mean, a little hot. Well, Bangalore is always, the weather is the USP in that sense. But how's the weather for markets looking, right? That's essentially what we kind of kick off the show as always with. Let's just quickly tell you what you need to know as we begin a new trading week. Now, I just want to start with the broad a top-down talking point, really. It's a talking point, and it's a lot about perception, but this is important. You basically have this as a bit of a problem for the markets. The problem is that the U.S. Growth in U.S. is proving to be resilient despite over 500 basis points of rate increases. That's the basic fundamental issue. Why is that an issue? That should be great news. Well, growth is great. They've hiked. The problem is many believe that inflation will continue to be a problem. It won't come to the Fed's 2% level until growth starts to slow down. And growth, presumably at this stage, at this point in time, is not slow enough. It needs to slow, but not yet. Discussion around the neutral rate is starting to pick up as a result. What is the neutral rate? Neutral rate is basically a level at which the Fed gets to, and then it doesn't need to do more. It doesn't need to cut. It doesn't need to hike. It just leaves the rate there for a while. That's the neutral rate. Because of these, because so much has been done in terms of hikes, there was some understanding that the Fed does not need to do more. Lagged impact and all of that will start to play through. But so far, it's not showing up. And that's the reason why discussion around whether this neutral rate needs to actually go higher. That's the big global talking point. The 10-year Treasury yield, it came off about 3 or 4 basis points on Friday, is still near about the highest level since the fall of 2007. So we are talking about the risk-free rate, the 10-year US benchmark at the highest since 2007. Well, we'll get more clarity. The Jackson Hole event, the big event at Jackson Hole is this week, and we will hear from the Fed Chair Powell on Friday. Will we get acknowledgement of the need for higher neutral rate? I think that's going to be the big talking point. Last year in 2022, when the Jackson Hole Summit happened, the kind of takeaway was that policymakers all said, we need to get to this neutral rate. I think this year, the discussion, or at least the expectation is that the discussion will be to find that neutral rate. Where is it? Are we already there, or we need to be higher? That's the basic global backdrop that we're working with. It's not a bad problem to have. It's not as if growth is cratering or anything of that sort in the U.S. It's actually, as I said on Friday, it's actually so good that it's starting to hurt at the margin, right? So that's the global setup. Now let's just get to the Indian context and what we're seeing, right? On Friday, we basically on the Nifty broke the low of 19,257, but managed to recover. So that's point number one. Support for the Nifty comes in at 19,230. So actually, put both those markers. One is 19,257. We managed to have a close of about 50 points above that. And then after that, if that were to go once again, the support comes in at about 19,230. It's an ending diagonal pattern. We'll try and show you graphically as well, chartically as well, how this looks. The resistance for the Nifty is at the falling trend line from the 9th of August high. That stands at 19,400. Actually, it's not a resistance. The point is you cross that, and then slowly you need, these are markers basically, that confidence will start to come back. That maybe this short-term pullback, the short-term correction, we are kind of putting that behind, and the market is starting to move on. So it's 19,400 is that level that I would like to put out this morning. It's about 100 points from where we are. Bank Nifty has not broken the 16th of August low, but we've not seen any signs of reversal higher, a reversal to the trend. The Nifty Bank did marginally break the 20-week moving average, which stands at 43,870. That's 10 missing, but 43,870. Support comes in at the recent lows of 43,600. And for the Nifty Bank, to say that the correction, the short-term pullback is behind us, we need to close above 44,100 or so. We're at about 43,850, which is not, again, very far away. Near-term markers, both on the downside and upside, which will give you an indication. I think the market's perhaps taking it easy, absolutely flat kind of open, according to the GIF Nifty. The big cue, and this is a global correction, the big cue to resolve that global dilemma will come in towards the end of this week when we will hear from Fed Chair Powell at that Jackson Hole symposium. Sonia.
Absolutely. And, we were discussing this, Prashant, right, on our Editors Roundtable show as to how this market is just consolidating. There is a downward bias, of course, but it's been in such a tight range for the last many weeks. But give and take everything, if you look at it, it's been the third straight week of losses that the US markets have seen. And our markets have also come off quite a bit. From those all-time highs, the Nifty is down almost about 3.5% from the 20th July highs. But there's further damage that's happened in the broader markets as well. Just look at the Bank Nifty, right? The Bank Nifty is down 5% now from the highs that we've seen in July. And you were talking about the resistance levels that the Nifty is facing. So that recent 11th August high that we hit of 19,480, I think that's been a big marker on the upside that the market has just refused to get above. And looks like there are not too many triggers which could take it above that in the very near term. The flows have also been very muted. So on Friday too, right, you didn't see too much by way of flows. DIs bought a tad bit, about 400 crores. FII sold. So a couple of things that you need to watch out for today. Of course, we'll talk about them in greater detail. Titan, where the company has acquired the founder's remaining 27% stake in Carrot Lane. So in the longer term, of course, in the near term, that could be a bit of a headwind, but in the longer term, that's a big positive. Jio Financial listing happens today. You were speaking about that a while back, so that all eyes will be on that. There's a Reliance AGM that takes place on the 28th of this month as well. So, there will, of course, be more details that will come through on, on what happens with Jio Financials, etc. And then Jerome Powell's speech on Friday, which is keenly awaited, and any directional call from that. But give and take everything, Nigel, this has been a market that has just not gone anywhere. It's frustrated investors, traders a bit. The bias is on the downside, but there are some firm markers that we're seeing right now.
Well, I'll agree with you, Sonia. You'll be tilting more towards the downside than the upside as this juncture. But it's been so-called a scalper's market. What is that? You buy the intraday dip, but you square off the position and don't carry it over. And that trade has worked out perfectly in the entire last week. If you pull up the Nifty intraday chart as well on Friday itself, you bought the intraday dip, well, you would be making some money. But if you didn't square it up well towards the end of trade, we returned back towards the lower end of the range. So it's a bit of a scalper's market, so to call it. One point that played out in the favor of the bulls is the Nifty Bank. Now, it outperformed the Nifty in Friday's trading session. It has defended the 100 DMA, and the bulls will be hoping that the Nifty Bank can find its form, because that's been the underperforming index. If that can find its form, then in fact it can help the Nifty get some support and maybe try to move up as well. Now, on the Nifty as well as on the Nifty Bank, we had the open interest that came in lower. And at the end of the day, we got the FI data points. Well, they covered close on 10,000 short positions, though they continue to remain net short, but the net short positioning as a percentage of the total open interest on index futures is at around 58% or thereabouts. On the option side, well, you had 19,400 call, 19,300 call. Both of them were fairly active. But on the downside, you had the 19,250 put, which was active, premium at around 60 rupees, which will give the bulls some kind of hope. So what are the levels you're looking at? Well, even if the Nifty recovers, you'll see a fresh breakout will come only once we can cross that 20 DMA. So at around that 19,550, 19,600, that's a bit of a resistance area. On the downside, we're hovering around the 50 DMA. Though going by the options data, the crucial support will be around 19,200, 19,250. And the Nifty Bank, since I said, it came back a little bit in Friday's trading session, it found its form a little bit, just outperformed Nifty, though marginally. The 100 DMA is important. We have managed to defend that mark. Intraday, we have breached that level. So that becomes a reference point. And I say that's important, the 43,600, 43,500 odd mark, because otherwise we're looking at a sharper correction in case the Nifty wants to go ahead, Nifty Bank wants to go ahead and visit the 200 DMA. So I think scalpers market, stick to that trade, right, which has worked. Buy the intraday dip, maybe you could do that. And in fact, square off the position if you get that bounce from the lows. But a fresh breakout will be only once the Nifty gets past the 20 DMA.
Well, absolutely. So that's basically what you need to know as we kick off another day, another week. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. James Sullivan of JP Morgan will join in to discuss the global trade setup. Our research team will get you CNBC-TV18's list of top 10 stocks of the day. And at 8:30 this morning, Prakash Diwan will join in with a quick check on markets, stocks and themes he'd like to bet on.
All right, plenty to talk about in the next 2.5 hours, but let's kickstart very quickly with some commentary coming in from one of the best and brightest minds, Jonathan Garner of Morgan Stanley, who says that earnings and sales are coming in broadly in line with estimates in Q2 thus far, but with relative strength in India and Singapore, where full-year estimates for 2023 and 2024 are also showing resilience. He says cautious guidance and US dollar strength is weighing on forecasts more broadly, particularly in China.
Okay, some money market views as well. This is B. Prasanna of ICICI Bank, who says the dollar is getting support from higher bond yields, while Asian currencies remain under pressure led by the weakening Chinese yuan. He says rupee traded with a weakening bias and closed at a fresh low, although RBI intervention protected it from a sharper depreciation. He expects a strong dollar trend to continue against emerging market currencies in the near term and expects the rupee to be in the range of between 82.8 to 83.5 in the next week, with RBI smoothing volatility.
All right, and on the bonds, B. Prasanna says the economic data in the U.S. continues to remain bond negative. He says local yields, meanwhile, retraced from previous highs on the back of strong investor demand. He expects range-bound movements in the near future in absence of any major trigger. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.25%.
All right, we got a lot of stock-specific action that we're going to be tracking for you. We get to that in just a bit in our special Top 10 segment. For the time being, though, we run you through the list. We're looking at PNB Housing Finance, Yes Bank, Route Mobile, Shoba, KEC International, Adani Ports, as well as the Murukupa Group stocks. They are stocks on the back of positive news flow. On the flip side, though, you have Titan, Gujarat Gas, and Tanla platforms that could be reacting to negative news flow over the weekend.
Okay, well, we have our first global voice on the program, and it's a pleasure, as always, to welcome James Sullivan, Managing Director, Asia Pacific Equity Research at JP Morgan on the program. James, great to have you with us here. It's always a pleasure. Prashant this side. You know, this big discussion which everyone seems to be having, which is where is this neutral rate? Does it need to be much higher than where we are right now? Weigh in on that, and how important is that for global equity markets?
First off, thanks very much for having me on the program. It's great to be back and spending a bit of the morning with you. So the JP Morgan view on rates right now is, I think, relatively clear. At the end of the day, we are looking for higher rates for a longer period of time. We're not looking for any incremental increases from here, but we are looking for the first rate cuts to be pushed back from the second half of 2004 to early 2025. We think that's very clear, particularly for the U.S., as well, for the Fed, as well as for the ECB. There's a little bit more volatility implied in the Bank of England. But on a broader basis, we are looking at higher for longer. And that's supported by the underlying macroeconomic data. As you indicated earlier in the program, growth in the U.S. remains relatively strong. And that's something that we do think will continue as we look into the second half.
Okay, so rates are going to stay higher for longer. James, thanks for joining us. If growth in the U.S. continues to be strong and equity markets have been strong as well, what is your forecast for the second half of the calendar year in emerging markets like India? Do you see the money come through thick and fast? Because that's been the case so far, barring for a few niggling worries here and there. What's your own prognosis?
So investment is always a choice of alternatives. And I think for India, the key alternative that we've talked about in previous programs is the choice for global investors between India and China as the two most liquid markets in emerging Asia. And I think on that outlook, again, JP Morgan view, I think, is relatively straightforward here. We do see continued growth difficulties in China over the course of the next couple of months, at least. We see the potential for an economic pickup as we enter the fourth quarter of this year and potentially early first quarter of next. But as a result of that, you're seeing very significant outflows across the EM complex, some of the largest that we've seen in years. Contrasting to that, you're still seeing extremely strong inflows from the foreign institutional investors into India to the tune of $1 billion last week and about $23 billion over the course of the last 12 months alone. And so that relative offset is something that we remain very focused on. China economic growth, JP Morgan is currently forecasting 4.8%. That's down from 6.4 at the top of the year. And I would stress the fact that consensus is still at 5.2. So we still see ongoing downgrades for overall China GDP growth relative to where JP Morgan is today. India GDP growth looks relatively steady. We can talk about the inflation outlook in India in a second and the impact that might have. The only other thing that I would throw in from a regional perspective on non-EM is Japan, where we are also continuing to upgrade GDP forecasts. We've gone from about 60 basis points at the top of the year to 1.4% right now. Streets at 1.3, so ongoing upgrade cycle continuing for the overall macroeconomic outlook for Japan. That's probably the biggest competitor from a fund flow perspective as people continue to sell down China and the broader EM complex and rotate into India and potentially, depending on fund mandate, into Japan.
All right. Hi, James. Good morning. This is Nigel on this side. James, with regard to India, what kind of growth estimates are you all penciling in? And also, everything is good at a price, right? Though China has been in a bit of a tizzy. Do you think in the near term, maybe at some point of time, the valuation argument plays in their favor?
So valuation comes to the fore once I can become confident of forward estimates. And because we're still seeing significant downgrades, not only from the macroeconomic perspective, but then down through the stack to the bottoms-up company level as well. And as you had indicated earlier in the program, company guidance remains relatively weak. We're still seeing significant government action against particular sectors. The most recent conversation is regarding the China healthcare sector, where anti-corruption drives have about 184 senior hospital administrators under investigation. That's important from a financial cleanliness perspective, but it does continue to ride herd on overall confidence levels in a market like China. We're not necessarily seeing those issues within India. India, from our perspective, really comes down to sector selection. You're still seeing positive revisions in sectors like PSU banks. You're starting to see negative revisions, however, in sectors like mid-cap IT, textiles, chemicals to some degree. So the sector dispersion is really critical to the asset allocation story for us at JP Morgan within the Indian context.
James, the Indian small cap, sort of, if I can call that an asset class, has been, I would say, maybe the best performing asset class in the world. It's just been incredible at the performance. So, big sort of institutional research teams like JP Morgan, how do you think about that? Because that's a segment which, over the years, over the last 2 decades or so, coverage there from especially big banks like yours has been lesser, right? I mean, it's been expanding. So just wanted your thoughts there, the SMID space in India.
So incrementally, I actually think it's an incredibly important conversation. What we're seeing for broader emerging Asia as a whole is what I would categorize as a transition away from top-down asset allocation to the country level. And in particular, I think this is true in markets where forward economic growth is perhaps more challenging than what we thought 2-3 years ago. So we're moving away from these large-scale asset allocations and really towards a hunt for alpha, a look for bottoms-up idiosyncratic ideas that are not necessarily linked to that more cautious macroeconomic environment. And I've just, in a very long-winded way, explained a small-cap environment. And so we do think that it's an important driver of alpha and investor returns. It is an area where JP Morgan is expanding coverage across multiple Asian markets.
Okay, that's interesting. One last question from my end, James, before we let you go. A very interesting trend that is taking place in the Indian markets is that banks have been under pressure for a while IT has come back just by virtue of perhaps valuations being a bit more attractive. Would you play the market that way now or for the rest of the year, especially in India?
We'd be, from a sector allocation perspective, we would be more positive on not only the large PSU banks, but also the microfinance names. We are seeing, again, very strong macroeconomic growth, a significant credit impulse, and valuations that, as you just said, are now perhaps more sanguine than they were several months ago. And so we would be more positive on the financial stocks in general at both the large as well as the small cap end.
All right, James, we'll leave it there. It's always a pleasure having you with us here on the program. Thanks very much for joining us on CNBC-TV18. Thank you. Okay, well, we'll take our quick first commercial break here. Our list of top stocks with our research team is lined up in just a bit from now. Stay with us.
Welcome back to Bazaar Morning Call. Hope you're having a good morning so far. The GIFT Nifty is suggesting that the start today will be absolutely flat, but there are plenty of stocks to talk about. First up, Titan will be in focus. Mangalam is here to give us the fine print on that. Mangalam, good morning.
Good morning. So over the weekend, there was news that Titan will acquire 27.2% additional stake in CaratLane for about 4,621 odd crore rupees. And it's the valuation that caught everyone's attention because Titan owns about 71% in the company already, and this transaction will take their stake closer to 100%, 98.28% itself. The latest tranche of fund infusion values CaratLane at a little over $2 billion, 17,000 crores. And remember, Titan first bought 62% stake in the company for just 357 crores in 2016, so valued the company at 575 crores, and now it's gone up all the way 30 times to 17,000 crores. For the 71% stake that Titan currently owns, they've paid no more than 400 to 450 odd crores itself. What's good about this? Well, it's a high-growing business, and Titan gets more stake in this. CaratLane's valuations, while it has jumped 30 times under Titan's watch, the sales have jumped 3 times in the last 3 years, and at the same time, 75% of their revenue comes in from studded business, so that's good. However, what's not is the valuation. Titan's paying nearly 8 times price to sales. So how should the street look at it? Well, it opens in the red largely because of valuations and where they fund it from. But from lows, we could see a recovery largely because it's happened earlier rather than later, which in any case would have been imminent.
All right. Well, that's going to be one of the big stocks to watch out for. Mangalam, thanks very much for that. The management joins us at 9:40 this morning. Ashok Sontalia, CFO of Titan, to discuss the CaratLane additional acquisition which has been effected. So that's the conversation you don't want to miss a little later in the morning. Gujarat Gas is going to be next in focus. Sonal is here with details of the price increase which we've seen after many months. Sonal, good morning.
Good morning, Prashant. Well, yes, there has been a price hike which has come about. In the Morbi region, the industrial gas prices, they have been increased to 40.83 rupees per SCM versus 38.43 rupees per SCM. This is with effect from today. Now, this is the first price hike that we are seeing in this year itself. The earlier price cuts, there were 5 consecutive price cuts that we saw in this year itself because of falling spot LNG prices. But this time around, they have been hiked because of high spot LNG prices globally. And for them, that is Gujarat Gas, the contract has been priced at $14.5 per MMBTU, which compares with $13.79 per MMBTU, and that is something which has seen an impact on industrial prices as well. It could be negative for the company because already there's more propane consumption versus gas consumption, so this could impact volumes for the company.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Rima. She's here to tell us about Tanla as well as Route Mobile. Morning, Rima.
Hi, good morning. So Vodafone Idea had awarded a contract to Tanla Platforms. This happened in November of 2021. It was a 2-year contract. So this contract comes to an end in November 2023. Now, Tanla Platforms has informed the exchanges that Vodafone Idea is not renewing the contract, as a result of which Tanla Platform is expected to have a revenue impact of 17 crore and a profit impact of 9 crore on a full quarter basis starting November of 2023. Instead, Vodafone Idea appears to have given this contract to Route Mobile for a period of 2 years. So Route Mobile, I was reading the LinkedIn post by the CEO, and he says this is one of the largest exclusive deals in Route Mobile's history. The contract value is dynamic in nature and is likely to exceed the minimum threshold criteria prescribed for the disclosure. So negative news for Tanla, but a contract win from Route Mobile should energize the stock. Back to you.
All right, Rima, thanks a lot for that. Let's go across to Abhishek. He's tracking PNB Housing Finance and Yes Bank as well. Abhishek, over to you.
Well, to begin with PNB Housing Finance, they have successfully resolved and fully recovered one large corporate account NPA of about 784 crores, which forms roughly about 34-35% of its gross NPA that it reported in Q1 FY24. So this forms about 1.3% of loan assets as of Q1. Resolution done via sale to ARC under Swiss challenge method. So as of Q1 FY24, they had a gross NPA of about 2,270 crores, which formed about close to 3.8% of the loan assets. Yes Bank, they have received one transaction value of rupees 230 crores. Now this forms about 2.42% of the outstanding of security receipts from JC Flower stress asset sale that they had done. So just to alert our viewers, they had sold stress assets worth 48,000 crore to JC Flowers in December of 2022, on which they had received a binding bid of about 11,183 crores. So 1585 was the structured deal done, about which 15% was cash and 85% was security receipts. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Let's hop across to Surbhi. She's here to tell us about some more stocks that are on the news today. Morning, Surbhi.
Morning, Nigel. So first one on my list is Soba. Now the promoter has released a pledge of 33 lakh shares on August 17th. So some positive news there. Next is KEC International. The company has won new orders worth 1,000 odd crores. The order also includes the construction of a multi-specialty hospital. Adani Ports GQG Partners has purchased an additional 2.2 million shares of the company, and now they have a little over 5% stake in the company from previously a 4.9% stake. And Murugappa Group stocks will also be in focus as the Murugappa family settles the legal disputes with Valli Arunachalam, and the family members are committed to undertake the necessary transactions to effect the family arrangement within the next 90 days.
All right, thanks a lot, Surbhi, and thanks to the entire team. Here's a quick recap in case you missed out on any of the stocks with positive news flow today. There's PNB Housing Finance, Yes Bank, Route Mobile, Soba, KEC International, Adani Ports and the Murugappa Group. While stocks with negative news flow, there's Titan, there's Gujarat Gas and Tanla Platform. So do keep your eye out on that. We'll of course get to our guests to check with them on how to approach all of these stocks. But in the meantime, the other big event that's taking place today is the Jio Financial listing. Abhishek is here to give us all the details that you need to know ahead of the listing. Abhishek, over to you.
Well, Sonia, as you mentioned, Jio Financials will be listing on bourses today. The price discovery has been done about rupees 261.85 per share. Now, Jio Financial Services will continue to remain in FTSE indices, and Jio Financial Services will be added to the MSCI Global Standard Index on 23rd of August. So, its filing indicate, business may include consumer and merchant lending, payments platform, insurance broking, AMC, and other non-lending activities. Currently, RIL holds about 46% stake. KV Kamath is the chairman. Hitesh Sethia is the CEO. Chandrajit Atra is the CEO, and other details are up on screen. Net worth is about rupees 1.1 lakh crore. Jeffrey says that the exchange-derived price of 262 per share includes value of stake in RIL and about 2x quote price to book value multiple is what they are saying. So value of 6.1% stake in RIL is of about rupees 1 lakh crore, which is 63% of the market cap of Jio Financial. Jeffrey note also indicate the key numbers as of FY23. Balance sheet size is about 1.1 lakh crore. 67,100 crore is the mark-to-market gains, mostly on investments in RL at a cost of just 15,400 crores. So core net worth is about 31,600 crores. Jio Financial Services has investment in preference shares of associates and JVs, which is worth about 17,600 crores. On the asset side, the investments are about 1.1 lakh crore mark-to-market gains, and majority of the residual assets are liquid assets over there. So Reliance AGM is on 28th of August, so market will wait to hear out on plans of Jio Financial Services. Back to you.
Thanks a lot for that, Abhishek. So we'll keep an eye out on that. In the next 90 minutes or so, we'll be getting that listing. Well, let's do a quick recap then of, all the stocks that we had just covered. You got all of that, and we have Reliance Jio as well that will be listing. But for the time being, let's move on, turn our attention from the equity markets to the commodity market space. Manisha joins us to tell us exactly what's going on there. Manisha, morning.
Morning, Nigel. Thank you for that. Well, the crude oil prices seem to have rebounded after 2% decline in the previous week. We are back above $80 a barrel for WTI, and 85 is back for the Brent prices also. The markets are reacting to the fact that the Saudi Arabia July shipments have continued to decline, and the street believes that it is going to be about next 45 days could take nearly 50 million barrels off the market, and that seems to be supportive. Also, the U.S. operating rigs are now lowest since March 2022, and that seems to be finding its way into the markets as well. For the metal sector, it has been a reaction to the China cutting its interest rates to record lows of 4.25% now. But the fact that the mortgage rates were not touched is something that's bothering the space here as well. The rise in inventories is another reason that you are looking at pressure continuing here. The dollar index also holding around 103.4 levels is weighing onto the market. So you have the copper prices, which are still trading around 2-month lows. Markets also have seen rising inventories in zinc, aluminum, and tin, and many of these metals now trading at multi-week lows as well.
All right. Well, Manisha, thanks very much for that. We'll take a very quick commercial break here. We get you excerpts from our exclusive conversation with Roshni Nadar from Malhotra of HCL Technologies on the company's expansion plans in artificial intelligence that will come up in just a bit. Also, Prakash Diwan will be joining in with stock-specific comments. Lots to discuss this morning. Stay tuned.
Welcome back. Hope you're having a good Monday morning. Well, for starters, the GIFT Nifty is suggesting a more or less flattish start, which isn't too bad. Well, Prakash Diwan joins us to help us out with some analysis of all those top 10 stocks that we just discussed. Hi, Prakash. Good morning. Well, let's get to the top stock then from the Nifty pack itself. Titan going ahead and actually doing the obvious. At some point of time, they had to go and take a larger chunk in CaratLane. But they've done it at around, 4,700 crores of outflow. Valuations look a little bit stretched. How do you view it? In case you get a dip, will you be looking to get in?
Good morning, Nigel. So, I think premium stuff always comes at premium. There's no denying this. And CaratLane has been absolutely a great fit for Titan's overall in its overall scheme of things. And it kind of makes its presence so strong that I think if they've paid top dollar for this, it is worth the price. But my understanding is that they're probably looking at expanding through this vertical in a faster way than what they would do on the brick and mortar side. So, it's very, very ideally suited for them to start expanding with least amount of capital to be put in. So the acquisition might have cost much, but operationally they can probably use this to grow faster. So I think, yes, if you get a dip, you always buy into a Titan, given the fact that it's been so resilient in all its fronts. And the beauty about the revenue stream now from Titan, Nigel, is that all of those things which were not working fully or to full potential have also started contributing. So it's kind of getting to see everything fall in place in a very nice way. So I would definitely look at buying on dips, but some people always find it expensive and hence it's not part of the value set. But then, Titan will always fetch a premium given its business model. So if you're okay with that, definitely this acquisition will only, this depth in the acquisition will only kind of make it stronger.
Okay, it's acquiring more stake in Carrot Lane at a time when the business is growing quite a bit, right? At 9:40 a.m., we will get to hear more from Ashok Sonthalia, who's the CFO of Titan. So do stay tuned in for that. Prakash, hi, good morning. The other big event that we're tracking is the Jio Financial listing. And we've spoken about this ad nauseum as to how this is, this has been one of the big triggers for the company. Of course, more details awaited at the AGM on 28th. But post-listing, what are your expectations from Jio Financial Services?
Good morning, Sonia. So, of course, as you rightly said, we'll have to wait for the details to come through to make an assessment of the kind of trajectory. But, given the sheer size of this particular listing, the space that it is in, the capabilities that it comes along with, it's definitely going to be historic. So, it's after 17 years that you have a new listing from the Reliance stable, and that means a lot. So you probably have a much wider, broader participation that will come through in the financial services space, not just from a stock perspective, but from an operational perspective as well. So I think it's going to be a disruptive kind of a move for them to be able to get into things which other players have taken much longer to establish. So the path to profitability or the time to kind of reach optimal scale is going to be far more different, and that's where the disruption is likely to be, rather than anything very fancy on products and all. They will probably use basic products, but utilize their strength, their distribution reach to kind of and the capital base to actually fulfill most of the needs. So I'm very excited, and what it will do is it will set some high standards. The way Jio did that for telecom, and everybody else had to kind of follow suit, whether it was in terms of coverage, pricing, accessibility. I think the same thing is going to happen with the financial service, though it's a much more mature business and there are large players which are already there. But this is going to set the cat amongst the pigeons for sure, to some extent, once it's out.
No, absolutely. By the way, would you buy... I mean, Reliance actually was the reason why the market recovered in a big way on Friday. Prakash, hi, good morning. And then, of course, it slumped towards the last 15-20 minutes. Would you buy Reliance right now?
So, good morning, Prashant. See, JFS plus the Reliance stock is, if you look at, Reliance probably is the only large stock which has not given up in terms of this whole mild correction that you see, right? And the reason is the other verticals for Reliance also are working very well. So it's not just, that the JFS impact is there, but of course, having got listed and realizable value getting attributed to it, Reliance does own 46% of the JFS stock. So, if anything that's like a bump up will definitely reflect on the Reliance stock as well, right? But my sense is Reliance on a standalone basis has enough going for itself. It's just that, because of the fact that it's too heavy a stock for people to kind of acquire, especially for the institutions, and it still remains under-owned. It keeps on seeing these switches in and out because of the ETF flow. So that's the reason why it's not kind of performed well as much as what you would anticipate. But I feel even from here on, there's enough value on basis all the other verticals, not just JFS. JFS is going to be a very, very significant trigger. But I would definitely recommend anybody who hasn't owned Reliance to that extent that you should could probably do it at this point in time.
Okay, all right. Prakash, request you to stay with us. So, for the time being, just going to invite Abhishek, who's joining in. He's read up some brokerage notes. He wants to fill us in with what they're saying. Abhishek.
Well, Nigel, to begin with, Citi has written on Sona Comstar buy recommendation over there, target price of about 680 per share. They say that demand trends in global auto industries are soft, especially in Europe. Now, new products and market share gain should actually continue to drive revenue and profits at a faster pace for Sona Comstar. So, management focus is on returns, growth and margin, which would augur well for investors. So, Goldman Sachs has written on NTPC a buy recommendation over there, a target price of 275 per share. They say that India reported peak power demand recording highest ever annual growth of about 18 gigawatts, potentially 2.5 times, 2.5 high demand months still to go in FY24. So they say that reported peak demand has already battered the estimate of about 229 gigawatts. So they foresee a revival in thermal capex as legacy coal business re-rates. Back to you.
All right. All right, Abhishek, thanks very much for that. That's interesting. We'll come back and discuss and put some of this to Prakash. Before we slip into a break, let me also tell you what's lined up here over the next half hour or so on this program. Anuj will join in with a quick trade setup. Post that, we'll get you the top stocks of the day and our from our technical and F&O experts. And before the market opens, CNBC-TV18 stock board, we will highlight the top stocks that you need to watch out for, which will react one way or the other at 9:15. Okay, welcome back. So we've got, 15 minutes to go for the pre-open session at 9 o'clock. The implied open from GIFT Nifty was indicating an absolutely flattish kind of start, but it's going to be an interesting, important week. Anuj is here standing by with how he's looking at the trade pan out from here. Anuj, morning.
Morning, Prashant. First of all, welcome to the club. Happy birthday.
Thank you.
How was it? Welcome to the 40s club.
Thanks very much. Thank you. Not 40. I mean, I'm well into the 40s club, Anuj.
Okay. But anyway, I hope you had a good one, Prashant.
Absolutely.
And,
Thank you, Anuj.
Wish you all the happiness for this year. Okay, let's talk about the market then. The market and stocks, of course, at a very crucial level. It's gone through 1 month of correction, the Nifty that is, and it's both price and time correction that we have seen. The high of 19,911 was hit exactly 1 month ago on 20th of July, and since then the Nifty has fallen 3.5%. The Bank Nifty has fallen 5.5%. It's only the Nifty IT which is actually been the strong part of the market, trading above all moving averages. Otherwise, most of the major indices are trading below the moving averages. Nifty IT is the only one, though it was weak on Friday, trading above all major moving averages. And look at stocks in terms of individual stocks. Whether you look at ICICI Bank, which has fallen about 6% and is trading at 50-day moving average, or you look at TCS, again 6% fall, just above the 200-day moving average. State Bank of India is 9% off the highs, testing the 200-day moving average almost daily. You have HDFC Bank, which has fallen 10% from its highs and just above the 200-day moving average. ITC is 12% off its highs. So the big stocks are the ones which are creating a problem for the market. A bit rare that mid-caps are not falling, but large stocks are falling. It's only Reliance, which actually adjusted for JFS, is actually trading close to lifetime highs. Now, what does that mean for the index? On the Nifty, we made a new series low on Friday. We broke the 14th August low, which is quite bearish actually. The first support today is 19,253, which is Friday's low, and the biggest support is 19,210, which is based on options. But the trading texture for the market has clearly been sell on rally. It's been sell on rally since the week 1 of this new series. And the texture changes only if you start to close above 19,500. In case the market rallies, the resistance levels would be 19,373, Friday's high, and 19,439 based on options. The Bank Nifty, despite Friday's outperformance, is actually the weakest component of the market. And here you have the first support at 43,672, which is Friday's low. And very close to that, the biggest support, which is series low, 14th August, 43,600. It's possible that in this run, you see a 200-day moving average test, which is placed at 42,800. Just in case you rally, there will be two resistance, 43,957, which is Friday's high. And I think the all-important resistance, which would be 44,212, which was the August 14 high.
All right, Anuj, thanks a lot for that. Well, before we move on from the entire Bazaar team, well, Prashant, belated happy birthday. It's always been great working with you. Wishing you the best. And
thanks, Nigel. Thank you.
I was just I was wondering, why was Prashant being a little naughty on a Sunday night? Now I know why. A couple of malls don't hurt at all. And yeah, so wishing you a good year, Prashant, ahead. And we're looking by to the treat as well later today.
Thanks, Nigel. Thanks very much.
Okay, all right. Well, let's move on then. Cloud as well as generative AI, well, they are game changers in the near term. That's the word that's coming in from HCL Tech Chief Roshni Nadar Malhotra. My colleague Abhimanyu Sharma caught up with Roshni of HCL Tech and began by asking her about the company's expansion plans in AI as well as other verticals. Let's hear out what she had to say.
There's, of course, a lot that's happening at HCL Technologies in response to generative AI and what's happening in different verticals of the industry. So we're responding appropriately in partnerships with a lot of our customers and ecosystem partners. On the semiconductor side, of course, there's a lot of work that the engineering and ERS division of HCL Tech does, and yeah, there's no other investment. It's all part of business.
As you rightly pointed out, generative AI, is that going to be a game changer, or this is going to be a paradigm shift the way cloud did? What kind of an impact do you feel it is going to make possibly?
So I think it is a game changer, but I think let's not underscore the cloud journey, because even despite everything, the penetration of cloud is still not as much as one had expected it to be. So I think that cloud as well as generative AI are both game changers, at least in the medium term.
And what is the strategic direction you're looking towards expansion? We have seen that there have been some headwinds for the IT industry globally, and also India has not been completely insulated from that. What's the growth outlook as far as your company is concerned, as far as expansion to newer geographies is there?
So, I mean, we've given our annual guidance, so we stick with that. And we continue to grow in our nearshore delivery centers. And, while there is a slowdown in some sectors, there is also lots of vendor consolidation that's happening. And there are a large deal that we just announced. I think it's one of the largest in the industry. So we're seeing momentum, and we will respond accordingly.
Okay, that's HCL Tech. First of all, retaining their FY24 guidance, but also talking about how generative AI is the big buzzword and there are big investments happening there. But guys, Nigel, Prashant, I mean, even I want to wish Prashant a very happy birthday. And I think Nigel said that, towards the end that hope we're getting a treat from you. Prashant, you didn't quite agree to that. But as and when the treat comes, please wait for me. Just when I come back to Mumbai, I want that treat for sure.
We'll do it after you're back, Sonia. So that's Nigel.
Yeah, you don't
agreeable.
You don't say no to a request coming from Sonia Shenoy. So we know that treat is postponed till Sonia's back.
Now that you're a part of the 40s club, right? You got to celebrate that for sure. Old is gold.
I don't know how to respond to that. I shouldn't be saying that. Well, 40s came a few years ago. I don't want to say that also, but well, been in the 40s for a while, so.
All right.
So yeah.
Great.
All right. Well, lucky to be aging gracefully, right? But let's toss this question across on the markets to Mitesh Thakkar and Sudarshan Sukhani. They're joining us now. Mitesh, good morning and welcome to the show. Sudarshan, welcome to you as well. Sudarshan, let me start with you, right? Because this market is definitely in a bit of a downtrend and you've talked about it ad nauseum, how this has become a sell-on rally market. What do you do at a time like this? If you don't have fresh positions, do you take a fresh position on the downside? And if yes, what are the markers now?
Yeah, good morning. See, now as we start a fresh week, then the first signs that the markets may be willing to stop and pause are coming in. We have been finding repeated support around 19,300. And while it's not a major support level, it is a minor support level and the market could easily pause here or even attempt a relief rally. So for today, at least starting today, I'm not looking for any further short positions till the markets give us another sign of shorting. The trade is to see if 19,300 holds more or less, then to look for intraday buying opportunities. If the market closes strong, then also I would be willing to carry a long position. Just to keep it safe, I would be using call options rather than futures.
Okay, all right, got that. Sudarshan, thanks for that call. Let's hop across to Mitesh. Morning, Mitesh. What about your trade on the Nifty? Do you think we're close to a bit of a base in the near term and we can bounce from here?
Morning, Nigel. I think certainly that is the hope. But before that, let me wish Prashant a very happy birthday. My belief is that I think, the markets possibly will take good support on this 19,200 mark. And I've been saying that as much while we have been negative for the last couple of days. I think around 19,200, I would even want to explore into some long positions in case we see a reversal sign. The intraday indicators are now oversold. We are close to a key weekly gap support area. So, in that sense, taking good amount of shorts and taking profits over there is the idea. And also, I think, you will be very fast in case you see a sign of reversal to explore and venture on the long side. I'm not looking at a big trend reversal because my overall belief is that the markets will find base over here and possibly go into range. Therefore, around 19,600 plus levels, you would want to take profits as well. So I'm looking at some kind of a sideways action in the next couple of weeks, broadly between 19,200 to about 19,650.
Okay, gentlemen, good morning. Mitesh, in terms of specific trades, what would you recommend?
On the trade side, Prashant, I have a mix of buy and sell calls. On the buying side is Bharat Ford, which I would want to recommend buying once it starts getting past an intraday pivot of 977. Then keep a stop at 965, look for a target of 1010. A conditional buy on Federal Bank if it crosses 136. Keep a stop below 134 and 143 will be the target area. MRF is a buy as well with a stop at 1,06,500 and a target of around 1,10,000. While one sell call, we earlier had a sell call in Denmark. I think Pharma is now showing first signs of profit booking. So Lupin is a sell with a stop at 1,082 for targets of 1,035.
Okay, got that, Mitesh. Thanks for that. Sudarshan, coming across to you. What about your picks?
Well, it starts with the same one that Mitesh had. It's Bharat Forge. After that big, large rally, it's been consolidating for 5 or 6 days. Such consolidations usually break on the upside. So buy with a stop under 945. Delta Corp is an intraday short. You have to check whether it's in the banned list or not. I don't know. But if it is not, then it's an intraday short. The stock has already fallen a lot and promises to fall a little more. Stop above 184. GNFC is another short sell. The stock has broken all kinds of support levels as it's looking for much lower levels here. Intraday short with a stop above 545. And my last is a buying opportunity. This is Tata Motors, which has found repeated support around 600, almost like the Nifty. So it's worth buying and seeing what happens. Stop under 595. Follow your stops carefully for Tata Motors.
Okay, got that. Thanks, gentlemen, for all of those stock ideas. Let's slip into a quick break. On the other side of the break, we'll have the pre-opening rates with us. We'll also have M. Prasanna Kumar of NLC India to talk about the pact that they've signed with the Rajasthan government for 300 megawatts of solar power supply. We'll also talk about the quarter gone by. Stay tuned.
Welcome back. Well, in a few minutes, we'll be getting pre-opened rates. For the time being, though, let's help you out with some derivative strategies. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, joins us on the show. Hi, Chandan. Good morning. What strategies do you have for us? First on the index, and then if you could give us a couple of stocks as well.
Good morning, Nigel, Prashant and Sonia. Thanks for having me. And happiest birthday to Prashant. So now you are 1 year more younger. Party hard and keep it up. Have a rocking time.
Thank you. Thanks, Chandan.
Yeah. So talking about market, the Nifty has been forming lower highs from last 4 weeks. Resistances are slightly shifting lower. It's been 1 month that we are either consolidating or we are slightly drifting lower. Pace of selling is also missing. So we believe that some sort of range bound or kept upside will be there. I'm closely watching 19,560 as a major level. If index surpasses above the same, then only the bullish bias will be big. Otherwise, we have to deal with some sort of consolidation or some sort of correction in the market. So as of now, till Nifty holds below 19,560, we'll utilize sell on bounce stance for the downside move to us 19,100 to 18,888 levels. Talking about Bank Nifty, that is also making lower highs, lower lows. An immediate hurdle is near to 44,150 and 44,444. Till we remain below the same, it can retest to the key level of 43,500 to 43,333 on the downside. So slightly mixed setup with some profit booking decline in both the indices from higher levels. Now looking at the stock wise, and the good part is that even after market correction or consolidation, selective stocks are doing well. So recommending to buy on Bharat Forge. Particularly we have positive bias on auto ancillaries name, and Bharat Forge is one of the strongest setup here. Major trend is positive and consolidation of last 6 days is adding the fresh leg of momentum. It has recently taken support near to 940, 950 zone. So expecting fresh leg of rally. This is also a consensus trade from all the panelists. So recommending to buy from current level, buy with a stop loss of 950, and Bharat Forge has potential to rally to us 1,010 to 1,020 on the higher side. Second trading idea, that is buy on Ambuja Cement. We have positive on the SEC and Ambuja. All these stocks are witnessing role reversal. Earlier hurdle, which gave the breakout again, started to act as a support zone. So role reversal is clearly visible, and some stock specific long built up is seen with put writing activity. So recommending to buy on Ambuja Cement with a stop loss of 443. Stock can head towards 473 level. Last trading idea, that is MFSL, Max Financial Services. So pole and flare breakout is visible on the daily and the weekly chart. The stock is in consolidation, but in that also it is forming higher lows. Longs are added, and now short covering is visible from last 2 days. So recommending to buy on MFSL with a stop loss of 853 and expecting the stock to move to us 910 to 920 level on the upside.
All right, Chandan, thanks a lot for joining in and have a great day. By the way, the pre-opening levels are settling in right now. So we'll wait by for these rates to settle. The only thing you can say is that Titan is up in the green. The street definitely likes the fact that they're getting higher stake in a fast-growing business, which is Carrot Lane. So that, that's a big thumbs up there. Okay, and now adjusting a bit on the lower side. Well, we'll wait by for these rates to adjust. But in the meantime, NLC India has entered into a long-term power usage agreement with Rajasthan Urja Vikas Nigam to supply 300 megawatts of solar power under the CPSU scheme. M. Prasanna Kumar, who's the Chairman and Managing Director at NLC India, joins us now to talk about that. Mr. Prasanna Kumar, thanks a lot for joining in. If you can just give us a little more details about this contract. What is the tariff that has been agreed upon at the moment? What is the contract duration? And when does it start contributing to your business?
Voice is not there, ma'am.
Mr. Prasanna Kumar, is my voice reaching you?
Voice is not coming.
Oh, my voice is not reaching you. Okay. We'll try and touch base with you once again. So that's NLC India, of course, a stock in focus. But apart from that as well, just a couple of more stocks that I want to put on the radar. Titan now adjusting a bit on the lower side, so keep an eye out on that. There's Gujarat Gas as well, where there was the Morbi price hike that was announced. So that stock will definitely be in focus. And a couple of more names. The banks, we were talking about how some of these stocks like SBI, HDFC Bank are actually off about 9-10% from their all-time highs. And once again, there's a little bit of pressure that's seeping into the banking space this morning. Axis Bank is down about 0.6%, and a couple of others as well. Nigel, over to you.
All right. Well, Mr. Kumar, good morning. Nigel on this side. I hope I'm audible. Just wanted to ask you with regard to this recent agreement you've entered into, long-term purchase agreement with Rajasthan Urja Vikas Nigam for supply of around 300 megawatt of power. Could you tell us what is the rate that you have locked in out here and give us a few more details with regard to this long-term contract?
Actually, NLC has won under CPSU scheme 510 megawatt. Out of this 510 megawatt, 300 megawatt, we have entered a long-term agreement with Rajasthan. And the rate is 2 rupees 52 paisa, in line with the CPSU scheme. And the balance 10 megawatt already is commissioned at Neyveli. And another 200 megawatt we are tying up with the state of Tamil Nadu, the state of Telangana. So we already signed the long-term agreement, and the work, the project work also is going on at Barsingsar in the Bikaner district.
Okay. Mr. Prasanna Kumar, if you can hear me now, can you tell us when does this start contributing to your books? What are you looking at in terms of a timeline? And any scope of expansion of work further from this particular contract?
Madam, this we already started the construction activities, and we are expecting that in the current financial year we will be able to commission part capacity. And by the first quarter of the next financial year, the entire 300 megawatt capacity will be added and start generating. And in this one, there is no scope for further expansion. But in the recent tender with Rajasthan, we won 810 megawatt. That LOA is to be issued. So in the same area, around 50-60 kilometers from that area, another park, we won 810 megawatt capacity.
Okay, got that. So the construction activity has begun, you're saying, and the commissioning will happen from FY24. Can you tell us what would this contribute to your business, say FY25 onwards, in terms of, monetarily, what would the contribution be? And also, can you give us, some trends on what the under recovery is going forward, just to understand how FY24 may end for you?
But the profit in the quarter one is impacted mainly on account of non-availability of some land in the Neyveli area. That was the reason we could produce 23% less generation. But now all the issues are settled with the support from state government and federal government. So we are hopeful that in the next 3 quarters we will be able to augment our production levels and generation levels to reach the target more than the last financial year. And in our coal production at Talabira, that is also we are aspiring for 13 million metric ton, and we are already in line with that in the first quarter. So we are also hopeful that in the coal production also we will be producing more than whatever we are aspiring. And on our Ghatampur thermal power station, about to be commissioned. The first unit we are targeting for the October, and all 3 units we are targeting for addition, capacity addition in the current financial year. So that will also start giving revenue to us. So with all these things, we are hopeful that our revenue and profit will be substantially increased compared to the last financial year.
Sorry, I didn't get that about the Ghatampur power plant. What are you looking at in terms of timelines? I think you fully tied up your capacity through PPAs over there. So will it be commissioned in this financial year itself? And what would the phase-wise commissioning look like? When will it start to contribute to you?
Madam, we already tied up with the state of Uttar Pradesh and the state of Assam for the PPA. No, 100% power tie-up is already there. There are 3 units of 660 megawatt supercritical units. The first unit we are expecting commercial operation declaration by October. Second unit we are expecting by month of January, and the third unit in the month of March. So we are hopeful that these 3 units are added to the grid in the current financial year.
All right, Mr. Kumar, for you, I think regulated equity is going to be important, right? That's a key matrix that the analysts look at. Well, your regulated equity, if I'm not mistaken, is around 10,000 crores odd, and that is likely to double with all the capex that you're putting on. Could you tell us what is that likely to go to? I think last time you were talking about around 22,000 crores. By when? And is that still on?
Yes, that is still on. Actually, as I already told you, we are expecting increase in revenues on account of the addition of Ghatampur to 3 into 660 megawatt, the increased coal production from Talabira mine, and start of coal production from our Pachwara coal block, which is linked to Ghatampur. And the solar capacity addition. With all these things, our revenue is going to increase. So with the with the increased profit and other surplus reserves, we will be able to manage that equity part.
Got that. Thanks very much, sir. Appreciate you joining in and running us through all that detail. That's NLC India with insights. Well, let's get in our 9-10 calls. We're 5 minutes away from the market open. Sudarshan is with us, and so is Mitesh. Gentlemen, good morning again. Sudarshan, what do you have?
Tata Motors can be considered for buying with a stop under 595.
Mitesh, what about you?
I'll choose Bharat Forge if it starts getting past 977. Buy with a stop at 965.
Okay. All right. Thanks very much, both of you. Appreciate you joining in once again, just ticking down and closing in the open. Prakash, I don't know if he asked you a broader kind of market question. I mean, is it looking a little distributive, price action? Or it's still, buy the dips which will work?
So, interestingly, what happens end of earnings season, you always have this time to digest whatever has come through in terms of figuring out what sectors you would have to churn into and out of. From that perspective, it will take some time for new direction to emerge, Prashant. And remember, we've also been the whole market mood has been sullied by the fact that FIs have been taking money out. So if you really see, I think there is value in certain pockets. You would have to start switching out of some of the sectors that have not performed well, and some which have probably shown signs of bottoming out as well, right? Whether it's chemicals in some parts, whether it's IT. There are pockets where there is a clear bottoming out indicating, numbers are indicating that bottoming out's happened. So I would look at that perspective. I'm not too worried about the market losing a little bit of breath. There's a time correction more than a price correction that's underway. And you'll have to live with this till new triggers emerge. So, yeah. But, going back to this conversation you had with Mr. Prasanna Kumar of NLC, I mean, there are these companies which 90 to 125, it's moved in just a span of about 1.5 months. So you will have price appreciation for companies which have got ignored by the market. So you'll have to look for those. Always difficult, sounds easier than, doing it. But I think there is a ample room for value seeking even at this juncture in some of the pockets.
Okay, all right, Prakash, request you to hang on with us. We just try to squeeze in one more question. Sonal joins us to tell us about the news that's coming in on Gujarat Gas. After a while, they revised prices upwards. Sonal.
Oh yes, they have revised price upwards. That is Gujarat Gas. They have hiked prices in the industrial segment for the Morbi region by 2 rupees per SCM to 40.83 rupees per SCM. And this is the first price hike that has come in after 5 consecutive price cuts that the company took because of lower spot LNG prices. Now, Morbi industrial gas prices, they have been hiked because hike in spot LNG prices globally. The company said that their contracts now are revised to $14.5 per MMBTU versus earlier price levels of $13.8 per MMBTU. Now, this could be negative for volumes because they've hiked prices. But again, propane prices are also expected to be lower in the next revision. So it's really margins versus volumes for Gujarat Gas. We'll have to see which way things go. But yes, the stock is in focus on the back of that.
Okay, all right. Thanks for that, Sonal. Well, Prakash, just chip in with regard to your view on these stocks, Gujarat Gas in particular.
No, I think this is something which definitely works well for them. I mean, we've seen the yo-yo in terms of not just prices, but the demand, volatility, given the fact that propane was started being used as a substitute and all that. But, eventually what's going to happen is gas prices are very closely correlated to the economic growth, and that's what will happen. So I think from that perspective, Gujarat Gas definitely stands a very good chance from this level to kind of start riding the revival of sorts in most of the underlying user industries.
Okay, Prakash, very quickly before the market opening, 2 stocks, SBI and HDFC Bank, both are off 10% from their highs. Would you buy either of them now?
So, Sonia, SBI definitely looks strong. I mean, there were reasons why we saw this, fall off, and all the attributed, explanation is very logical. So it would kind of turn around. I mean, I don't see any reason why it would need to be at this level forever. HDFC Bank has its own share of, transition and migration to a newer entity and all. So that might take longer, but SBI definitely at this level, for sure, is the pick.
All right. Thanks a lot, Prakash, for that. Well, we're just heading into the market opening right now. Looks like it's going to be a pretty quiet opening. At least that's what the GIFT Nifty is suggesting. But do keep an eye out on a couple of these stocks. Of course, Reliance Industries will be in focus with the JFS, the listing today. But apart from that as well, Titan, a couple of other stocks in focus, Gujarat Gas in focus as well on the back of the Morbi price hike. So just about 6 seconds left for the markets to open. Last week was pretty lackluster, so let's see if there's any recovery inside this week. Okay, that's the first take on the opening bell. The Nifty is absolutely flat, just holding on to the 19,300 mark. The Bank Nifty as well, very, very quiet. Now a tad bit in the red. Okay, largely consolidating, you'd have to say. The advance decline ratio is slightly in favor of the advances, so about 800 stocks on the advancing side on the BSE. Now, in terms of big movers, as I said, Titan, the street has taken it well. The fact that the company has raised their stake in Carrot Lane, 0.7% higher. A couple of the banks, IndusInd Bank is coming back a tad bit. Axis Bank is in the green, so banks are just about holding fort. The Nifty Bank itself is up about 100 odd points. Adani Group stocks are doing well. Adani Enterprises up 0.7%, Adani Ports up 0.5%, and a couple of these names like TCS, Infosys from the IT space also not too bad, just hanging on to the green line. On the downside, M&M is down about 0.8%, perhaps some profit taking. It's been one of the strongest stocks this year, still up about 24%. In fact, the entire auto space is coming in for a little bit of profit taking. Eicher Motors, Bajaj Auto, Maruti, Hero MotoCorp, all in the red right now. And then you have a couple of these pharma names like Sun Pharma that are down about 0.5%. HUL, Tech Mahindra, BPCL are a couple of other stocks that are trending in the red, and Reliance Industries as well is down about 0.6%. But the headline index, you'd have to say, is very, very quiet, just consolidating around that 19,300 mark. No major trigger either way. Of course, there's plenty of action taking place in the broader market, so Nigel will touch upon that. But for now, it is very, very quiet. What's happening in the broader markets, Nigel?
Well, in the broader markets, plenty is happening actually, Sonia. And the one number that you want to look at is the number of stocks that are advancing in comparison to the number of stocks that are declining. So that's in the ratio of 4:1. What's doing well? Gujarat Gas. Sonal just told us about that price hike. The street is taking it positively. That's up close to around 1.5%. KEC International, they won an order worth around 1,007 crores. The order includes construction of multi-specialty hospital. The street likes that. That one's flying away, in fact. It's up close to around 6%. You have Shobha as well that could be in focus. The promoter entity had released pledge on close to around 30 lakh shares out, so the street likes that as well. More or less flattish with a mild positive bias. Metropolis has popped up in trade. Now, that's up close to around 2.5%, and that's one of the big volume buzzers actually today. The market's now, moving up gradually. We're up close to around 35 points approximately. A few other notable movers. EIH from the broader markets, that's up close to around 2.5%. Lemon Tree as well is higher as we speak. And DB Realty, for this month itself, the stock is up more than 50%. It's up close to 5% to kickstart trade. Prashant, what else?
Well, just a few other names, right? KEC, I think, as we mentioned, is up. It's got one of the largest volumes as well right now. 5.5%, 6% higher. 660 odd is where it is. Apar Industries has been doing well recently. I think it was one of the companies which we had on Inside Out recently. So that's been doing quite well. This month, I think it's up some 30% or so. We have JM Financial. JM Financial has done well. I mean, Friday it was up sharply. I think on Thursday it was up very sharply. And that one is up about 3% this morning. We've got Data Patterns, which is another one. It should come up on your screen. There's a 6% gain on Data Patterns on a decent-sized volumes for this point in the day. These HEG graphite, right? Jeffries note this morning. HEG starts, I think, 3.5% higher. Maybe we can put up Graphite India as well and take a look at what that is doing. So HEG and then Graphite India. Volumes are decent. Then you look at something like a Jupiter Wagons. Locked up, limit up 5% daily for the last at least 4-5 sessions now. So that's another big winner that we've had. It's up about 40% in this month. It's up 200% year to date. So that's quite something. So that's the market. It's a slightly quieter kind of start, but we're up 40 points. So nothing to scoff at. 19,345 is where we stand. Mahesh Nandurkar is India strategist at Jeffries. He's joining us now to take some questions. Mahesh, good to have you with us here. Thank you very much. Is all well near to medium term, or are valuations going to start to hit some, insurmountable kind of walls? Or are we not there yet? Just your thoughts near to medium term where we stand. I think unmute yourself. I can't hear you.
Yeah, okay. Thanks a lot. Thank you for having me here. Yeah, I think from the medium to long-term perspective, things appear pretty attractive. A lot of global and I would say local factors as well coming in sync. Economic activities have bottomed out. Things are improving. CapEx cycle is unfolding, and at the same time, we seem to be getting reasonable support, from the investor community as well, which is also quite crucial because it's not always that we find that good economic growth and good corporate earnings growth necessarily delivers good market returns, unless there is positive liquidity momentum as well, and which is the case at this point in time. So, a lot of factors are aligning for Indian markets to do well. From the medium to long-term perspective. From the near-term perspective, there are always, some challenges, especially now because, the markets have had a decent run, already, global markets as well, and we seem to be taking some breather. The global yields have hiked, have gone up quite a lot. The Indian yields have also gone up, so to that extent, the risk-free rates have gone up. Also, there are some near-term, things that we need to keep in mind that India's inflation has surprised on the positive in terms of, on the higher side, which is a bit of a negative for the rate-sensitive sectors. So I think from a near-term perspective, maybe from a 3 to 6 month perspective, the market could be range-bound. But if one is looking at a medium-term, 12, 24-month kind of a perspective, maybe longer, things are looking pretty good, I would say.
Okay, things are pretty good for the longer term. By the way, the market is not bad. Actually, the mid-cap index is picking up quite a bit of pace now. And we were talking about how many stocks are trending in the green. PVR, by the way, is sitting at a fresh 52-week high after very strong collections that came in from Gadar 2. So the box office collections have almost hit 400 crores, and that's, spiking up PVR right now. And PNB Housing, we just spotted that stock for you. It's up about, 6-7% as we speak. It's resolved and fully recovered its large corporate NPA to the tune of about 800 odd crores. So that's PNB Housing, 7% higher. Mahesh, thanks for joining in. What do you do with some of the large caps that have fallen quite a bit, right? If you look at SBI, HDFC Bank, even TCS for that matter, these heavyweights are down about 10-12% from the highs that they've seen in the month of July. Is this a time to be accumulating some of these large caps, or do you think you'll get a better opportunity over the next couple of months?
I think the large cap banks definitely appear to be very attractive. I would say they have looked attractive from the valuation standpoint and from the fundamental standpoint as well. In fact, I would highlight banking sector as the only sector which is trading currently at average valuations compared to its history. Most other sectors are trading well above. So from that point of view, it's not just the fundamental, but from the valuation standpoint as well, the banking sector is looking good. The only issue with the sector is over ownership. Most of the large foreign fund houses as well as domestic fund houses seems to be owning a lot of banks already. So that's the only challenge. But yes, I would agree with you. Many of these large private banks, including the PSU banks, appear to be quite attractively positioned in my view. Also, it's a great way to play the capex cycle as well because we are seeing credit growth holding up quite strong, and that's primarily due to incremental positive trend that we're seeing on the project loan side. So banks definitely yes. On the IT side, I would say it's it would be good to look at it from a near-term tactical standpoint. As I mentioned earlier, maybe from the near-term perspective, the market could just be range-bound, and maybe from that perspective, IT sector could deliver outperformance here. But I would view it as a near-term tactical buying opportunity, not really something that I would look at least at this point in time, from a longer-term perspective, because the issues in the US economy are still very much there. And while the growth is surprising on the positive for the last couple of quarters, but eventually I feel that there is going to be an inevitable slowdown, maybe visible in the beginning CY24, late CY23. So I would say IT sector good to look at from a near-term perspective, but it's still not a buy and hold for us from a long-term perspective.
All right. Hi, Mahesh. Good morning. Nigel on this side. Mahesh, I wanted to ask you about these city gas distribution companies. I think you're not very positive on Gujarat Gas. If you'd give us your view out there on the space itself. Price hikes are coming about. You have volumes as well that are picking up a little bit. How do you approach this theme?
Yeah, price hikes are coming through. But I would say at the same time, the input prices are also going up. So when we look at margins, we don't really get a comfort, on the margin perspective. So I would still like to be, on the sidelines for that sector.
Okay, sidelines for that particular sector. Within the entire infra/capital goods story, Mahesh, which sub-segment are you most excited about from here on? Say for example, roads, right? Now that's more or less a mature kind of sector. The build-out, etc., has happened, and that'll continue to happen. But in terms of incremental, big sort of growth, is it going to be railways, for example? Is it going to be something else? Water, for example? Any new themes within this broad gambit we call, infra? What are you most excited about?
See, if you look at the broader cap goods infra sector, and it's a sector that obviously we've been, very, very positive about, and continue to be positive. I think India, as a whole, has just entered the capex upcycle, and I think it's a cycle that is usually, going to last for at least another 4-5 years, in my view. So a lot of stocks in this sector, the cap goods, infra, and I would say the broader capex cycle play, the investment cycle play, are going to deliver excellent returns in my view. The one thing that we kind of I wanted to highlight is that when you look at the capex cycle play or the investment cycle play, there is actually a dearth of stock ideas, especially in the large cap names. I mean, there are a couple of large cap names here, but that's it. And then if you want to play the investment upcycle, you really have to go down into the mid-cap space. And in the mid-cap space, obviously, there are a whole bunch of ideas. And my sense is that different investors are going to take, different view about the various sub-segments that you're talking about. But by and large, given the fact that there is a dearth of ideas at the large cap space, I think many of these mid caps and small cap subsectors will do very well. You mentioned roads, but I would say even the contractors, the capital goods, the equipment makers, defense. So there are a whole bunch of these stocks in the mid caps and small cap space, particularly, which should deliver excellent returns in my view. Maybe from the near-term perspective, as I mentioned, given that the yields have gone up and given that the fact that the inflation has surprise on the upside, maybe from the near-term perspective, there could be some challenges, but I would actually use any of these dips to buy into these names, all the subsegments, cables, wires, etc. as well. And I would not really get bogged down by what the current P multiples or the current valuations are. Many of these stocks are trading at well above their historical trading ranges. But, as I mentioned earlier, we are seeing the capex upcycle in India for the first time in the last, I would say, 12, 15 years. Many investors haven't really seen the capex upcycle in India and, how the stocks typically react in that kind of an environment. So I would not get bogged down by above average valuation seen in multiple subsectors within the broader cap goods infra space.
Okay, got that. I do want to ask you about your own overweights and underweights, but I'll come to that in a bit. Before that, the big event upon us, Mahesh, is the Jio Financial Services listing, right? And the narrative is that it has a potential to disrupt the digital lending landscape in a big way, just by its sheer distribution reach already. And perhaps there could be a consolidation in the sector with smaller players, finding it hard to survive in terms of pricing, etc. Your own thoughts on how this could play out for the industry?
Yeah, so as you know, Sonia, I'll not be able to comment on individual stock, but at a broader industry level, yes, it's a big company that is entering into this space, and my sense is that it is going to take some time for any new company, no matter what kind of muscle power that you're coming with, it is going to take some time for the company to establish itself and show meaningful impact in various subsectors that you mentioned, and I think eventually it will. But my sense also is that Indian financial sector is growing. It is severely underpenetrated at this point in time. And if you take a 5 or 10 year view, I definitely see that there is enough space for more than 2 or 3 large NBFC players to be present in this segment. I mean, we've seen so many large banks, right? So it's not necessary that one large player entering will disrupt the existing companies in a meaningful way. They will obviously have to kind of gear up for sure. But whether I'll just be in a hurry to sell my existing holdings in the NBFC space, the answer is no, because the space itself is growing and existing companies are also innovating.
Okay, thanks very much. It's always a pleasure. Appreciate you joining in, Mahesh, with all of that perspective here on CNBC-TV18. Thanks indeed. Well, the market's doing just fine. We're up, 50 points at 19,363. Look at the SBFC, Small Business Finance, the listing. It's 4 days old, listed, had a bumper listing. And the high was, about 95, 96. It's drifted a little bit since then, as the markets looked a little, seen a little bit of pullback. So about 86 now on SBFC at this point in time. Well, the Motilal Oswal annual conference is kicking off today. It is the 19th annual Global Investor Conference. And as always, the conference promises to bring together top CEOs, a diverse range of eminent speakers, experts over the next few days here in Mumbai. Well, according to Motilal, we're talking 200 plus companies with 1,000 plus investors from across the globe. Ramdev Agarwal is the driving force behind the research endeavors at Motilal Oswal Financial Services. He's joining us. He's chairman, co-founder at the company. Mr. Agarwal, great to have you with us here. Thank you very much for your time. Appreciate it. I can see the sort of activity starting up behind you. So it's always a very vibrant event. And thank you once again for joining us from the sidelines of it. What are you most excited about, Ramdeo, about from this conference? What are you hoping to learn from all the companies who are going to be there and all the investors who are going to be there? Because it's a two-way process, right? I mean, they'd want to hear from you and you'll hear from them. What's top of mind for you, really, this morning and over the next couple of days?
Yeah. Good morning, Prashant. I think the mood is set. We are at all-time high, and after a long time, there will be a full participation, because last year was the first year post-COVID. Still, participation a little muted. But this year, I think investors have come in full force, and people are coming from, apart from domestic ones, we are getting the delegates from newer countries like Korea, Taiwan, Japan, apart from usual Hong Kong, Singapore, US, London, those guys, they have been coming in the past, but now we are seeing slew of new countries joining in. So we'll get opportunity to interact with all of them. And even the companies lineup is about 220, 225 companies. So I think it's a big mela for next 3 days. And I'm trying to catch few trends, what's happening in terms of what's happening in the economy on the ground, because all the operators are there. Second is that what is the thinking of FIs in terms of their confidence in India, how do they think, and their allocation, would they like to be still conservative, or would they be, this is 23, 24 will be the year of again coming back into Indian market. So those are the discussions which are going to come, and it will be more in listening mode than too much of asking.
Ramdeo, hi, good morning. This is Sonia here, and all the best for the conference. It's very interesting, right, to hear that so many FIIs from new geographies have registered this time around. And if you look at the data that has come into the Indian markets in terms of FII flows as well, FPI flows rather, it's been the highest in India compared to the rest of Asia. So what is the sense that you're getting from the interactions you've had already? Is the interest still as high as what it was in the last 6-8 months? Or is there now a little bit of caution that's kicking in?
Yeah. So, Sonia, very good morning. I think it is too early. I've just come in here to the venue, and through the day, and till late night, and tomorrow and day after, I think 2-3 days I'll be interacting with all of them, and during the conversation only we can figure out what kind of interest they have. But right now, I would say there is an optimism, and the number of, I'm going by the fact that the kind of a request which is there for the participation and the number of meetings. I think we can do about say 7,000-8,000 meetings effectively, but the request is for 25,000 to 30,000 meetings. So that tells me that investor interest is very high. This is of course mainly domestic demands, but even the foreign demands for the meetings are quite high.
Hi, good morning, Mr. Agarwal. Nigel on this side. A lot of foreign interest as well, but a lot of big HNIs from all across the country as well, have come for this conference. And a lot of them we don't get to meet, but because of the conference, we're going to be catching up with some of them post the conference. But tell us about the interest levels, particularly the mid and the small cap space, because that's been an outperforming index for the last 5 to around 6 months. Is there still big interest out there? And what's your view? Have it run a little bit ahead of itself?
Yeah, so I think it is to do with the structure of the market. Still the institutional activity, particularly from the FI side, for last a month or so is a little subdued. But we are passing through one of the, in fact, I'm presenting on that, India's retail equity revolution. It's nothing less than revolution in what has happened post-COVID and what is happening and what could happen in the next 3-4 years. So we are trying to compile this thing. So the impact of retail equity revolution, or demat accounts are opening, participation going from 30-40 million to 120, 130 million, and trying to become more like 200 million in the years ahead. I would think that interest level will actually become bigger and bigger, and these are the counters where with a limited floating stock, but a lot of buying power. So that tends to distort at some point of time, but eventually the corporate earnings underlying will decide the levels where it will settle.
No, so if I were to, Ramdev, if I were to ask you right now, right, for the small cap space here has been the best performing, in a way, asset class, not just here in India, but maybe around the world. Maybe this year or whatever time period you want to use since the rally began. So where are we? I mean, is that space looking still quite okay to you? You have a sense of history. You've seen this play out many times before. What's your sense? Is it time to take the foot off the pedal a little bit, or fundamentals and earnings there are looking healthy enough to kind of sustain this up move?
Prashant, our biggest problem is that we have seen 40 years of the market. We have seen such low levels of the market. The mid cap, small cap was so neglected. Single digit P was, they were thankful. But today is just the different kind of thing. So many times I'm not able to appreciate the valuations granted to small or mid-sized companies. Of course, they are growing very rapidly. So, that's the kind of thing. But as I said, there is a structural boom from the retail side. And retail is not happy buying HDFC Bank and ICICI Bank. They are happy playing out on more on this mid and small size companies where they have access to the information and they can also size up their bets. So I would think that excitement will continue. Of course, it may shift from one sector to other sector, one company to other company, because no company can keep growing to the sky. But I think you'll find a lot of excitement in the small and mid caps, and the names of the companies will keep changing. Today it is defense, tomorrow it could be NBFC, day after it could be some other theme. So whatever themes comes, but I think that sector will remain quite exciting.
No, you started by answering that question by citing retail flows. Now, and that is also a big structural driver now, which was not there even 3, 4, 5 years ago. So that. Yeah. But how much of the boom that we're seeing in that part of the market is because of this? And how much of it is driven by? It's a mix, obviously, but I'm just saying, is it retail money chasing some of these stocks up? Because you got to square that off against earnings growth and valuations, etc. So just trying to get a sense from you, Ramdev.
Yeah, so Prashant, what has happened is that in the past, till about, say, January 20, so this entire phenomenon is just about 3 years old. So before that, the retail participation was extremely muted. Let me give you some number. That number of demat accounts opening every month was about 3 to 4 lakhs, and at best it will go to 5 lakhs. The moment the digital onboarding is started, it shot up to 30 to 40 lakhs. Now the average between 20 and 23 is more like 2.5, 3 million per month. And in between, when the market was correcting, it dipped, and now again it has come back to 2.5, 3 million. So this is very relentless. There is a lot of juice in the number of participants which are going to come in. I mean, you can imagine from 40 million to 130 million, and that going to 250 million. So at least the boom in participants is on. Now, what it will do? See the 2-3 forces coming together. One, increasing number of participants. Second, the increasing disposable income of all these guys. So, and third is the increasing corporate earnings. So when all three come together, and if you look at from the FI side, FI in last 30 years have sold only five times, and last time was the last year. So I would think probabilistically they would not be net seller in a meaningful way for next 2-3 years. So now you have foreigners buying, retail buying, corporate earnings very good. I think you can't get a better picture than this.
Okay, we'll end that on a positive note. Ramdev, all the best for the conference, and thanks a lot for joining us to give us a primer on what to expect from the Motilal Oswal conference. Well, let's move on. The big deal that took place in the last 48 hours was Titan deciding to acquire additional 27.18% stake in CaratLane for 4,624 crore rupees. Do note, this transaction will take Titan's stake in CaratLane to 98.28% on a fully diluted basis. Ashok Sonthalia, the Chief Financial Officer at Titan, joins us now to talk more about that. Mr. Sonthalia, thanks a lot for joining us. First, if you can just tell us what was the rationale behind acquiring this additional stake. Is it because CaratLane is, a fast-growing business? And how do you plan to fund this as well? What could be the way forward in terms of both funding as well as the changes in CaratLane post this deal?
So good morning, Sonia, and good morning to your viewers. Of course, since we acquired first time in 2016, last 6-7 years, CaratLane has come of age and 2,000 crore plus and established itself as a strong omni-channel player targeted at young women consumers and fashion diamond jewelry space very, very strongly. We see from Titan point of view, it's a multi-decadal opportunity of value creation. And that is what the primary motivation for us to kind of increase our stake at this point of time. India is poised for next decade or 2 or 3 from the consumer story point of view. And I believe jewelry segment is also equally going to do well. As far as this deal is concerned, our balance sheet is pretty healthy. We have a good cash position, but we are going to do part debt funding for this deal. And we are working towards that. And by the time deal comes to closure in next 2 months kind of horizon, we should be ready with our financing plan. But part debt funding is contemplated. As far as your third point, CaratLane, of course, after the deal closure, founder Mithun Sachetty will step down, but the current CaratLane team, which is very, very excited, is expected to continue, and then they are going to take forward this value creation journey.
Yeah. All right, Mr. Sontalia. Well, this is Mangalam here. I just wanted to know, same time last year we were having this conversation whether you will look to increase your stake or not. You said at 72% you are comfortable and it allows you all the control that you have at CaratLane as well. So within 1 year, what happened for you to actually put in like 4,600 crore rupees for just, 21% stake in the company? And you said that it will be part debt, part cash. What is the current cash on your books?
Could be more than 3,000 crore, Mangalam. While, on the ground, we are not changing strategy, and that 72% control was good enough to manage the portfolio and the way we wanted to do that. It is more looking at one stage of value creation and bringing the company to a stage where it is a very, very strong omni-channel player. And from here, what value creation opportunity is there? And we being an insider, we can clearly see that. We want to participate at 100% level there. In any case, also, you should appreciate that with an individual and corporate joint venture situation has to see exit at some point of time. And we believe this was the right time for Titan to increase its stake.
So is there any agreement for the remaining 1.7% stake, which you haven't bought now? Because after this, your stake will be, close to 98.3 odd %. That's one. And secondly, what will the margins of this business improve to? It's just 5.5%. You're saying there is strong potential.
Yeah, so, there are several employees who are ESOP holder in the company and who have equally worked hard along with Titan and the founder team to kind of take this company to where it is. So it is only fair that some kind of liquidity they also see and reward they also see. But all these things will be considered only after closure of the transaction. And it is for Titan board and CaratLane board to consider how we want to deal with that 1.7%. The second point which you, what was your second point?
Margins, sir. Margins from around 5.5%. Where do you see it headed?
So, if you look at EBITDA margin trajectory for last 5 years from up to FY23, almost -9% to +9% it has happened. CaratLane is largely diamond jewelry business. So the opportunity to keep inching up margin and gradually not only equal Titan jewelry portfolio margin, but be slightly better than that exists. And I think we will see them working towards that.
All right. Hi, Mr. Sontalia. Nigel on this side. First of all, congratulations on this deal. Some part of the street would have expected the stock to be under pressure because of the kind of valuations you have paid. But clearly, they've taken it positively. So let's understand the trajectory from here on. One is on the revenues. It's moved from 700 crores to 2,200 crores odd. What is the growth trajectory you'll be looking at from here? Point number one. And point number two is, since, you've gone ahead and paid top dollar for this, clearly you have a vision, right? So will you look at listing this arm separately at some point of time?
So, they have been growing 50% plus CAGR, but of course, scale impact would expect it to be certain. But we certainly believe that this business still has huge opportunity and huge growth ahead of it. Like we talk about that our jewelry business with respect to jewelry industry in India is current 7% market share and will go towards 10% by FY27. CaratLane similarly within Titan jewelry portfolio sits at about 6-7%, and they should go towards 10% by FY27. So certainly they need to grow, and in our expectation, they will continue to grow faster than rest of the portfolio for foreseeable future. And beyond that, I don't want to give you a specific number at this point of time. As far as the question on merger, etc., is concerned,
no, on listing, sir. On listing the arm separately, Mr. Sauntalya. Do you have a plan to list it separately at some scale?
No, there is no immediate plan, and I don't think we are even considering listing. We will rather run a portfolio of brands for our jewelry business, and it doesn't make sense to us to have two listed entities in the same space.
Mr. Sauntalya, we've got most of the numbers here out, but I just want to understand, you said CaratLane is largely diamond-led, right? Do you do artificial diamonds as well?
No, they don't do. It is all real diamond, natural diamond.
Okay. Globally, the share of artificial diamonds, right, is increasing rapidly. I mean, at least that's what I'm able to gather. How is that a threat at all down the road? I mean, you'd have a better sense than anyone else regarding this, because that would mean much lower margins, etc., if that were to kind of, become widely accepted here in India as well. Your thoughts?
So, Prashant, you would recall that March 22, we made a minority acquisition in a lab-grown diamond company in US. This is, of course, with the intention to keep understanding. US is the, I would say, at the most front of this whole lab-grown diamond industry. And we understand what developments are happening. And you are right to say that lab-grown diamond are, at least in bridal engagement ring, etc., is making good inroad in US market. As far as the India market is concerned, we have not seen. India is more becoming a supply chain center for the lab-grown diamond. But in consumer space, still we have not seen much. We rather see, while it could be a slight risk, but we see more than risk that it is an opportunity for bringing many more consumers so that diamond could be for everyone. You would have heard diamond forever, but diamond for everyone kind of thing can happen. And we will be ready. We are ready with our knowledge. We know how things are progressing in US. Yeah. So when Indian consumers are ready for this, we will have our own offering.
You'll be ready as well. Well, it's lovely to hear. Thank you very much, Mr. Sauntalya. It's always a pleasure having you with us here on CNBC-TV18. Appreciate your time, as always. That's Titan with their perspective on the sort of deal which they've struck with regards to CaratLane. Stock's actually higher. The market's up. It's given up a little bit. It was up 50. We're up about 18 points now, 19,327. We'll take a quick commercial break here. But we have a special chat lined up with Mithun Sancheti, the founder of CaratLane, on our show Young Turks. You can catch it right here at 5 p.m. later today, only on CNBC-TV18. Well, right now, after the break, we will connect with Sriram Velayudan of IIFL Securities and Prakash Devan and Gurmeet Chadda of Complete Circle to talk about the big listing, Jio Financial Services. Stay tuned. That conversation comes up next. Okay, we'll have Jio Financial Services start trading in about 8 minutes or so. Sriram Velayudan is Vice President, Alternate Research at IIFL Securities. Prakash Devan is joining us, and we also have Gurmeet Chadda, Managing Partner and CIO at Complete Circle Consultants, joining us. Gentlemen, great to have all of you here. Gurmeet, to you first. I mean, your assessment of where this should settle down post the listing. I think that's what we need to kind of focus on here. And any thoughts around this new listing?
No, eagerly looking forward to it, Prashant. So there are three bases to value it. One is, that 6.1% stake, and you have to ascribe some holding company discount to it. Second, it's lendable net worth. If you see, it's about 22,000 crores. If you take the cost value and the other liquid transfer which has happened in the entity, which means for next 2-3 years, it can build a lending book of roughly about $14-15 billion without really having to, dilute anything or raise more capital. And I think it will get a book value similar to what a Bazaar to Chola gets, because it would be more a digital lender, to probably grow at a much faster rate. So I think the current price looks roughly around that. I think you can value it around that. And I think this is probably more new age. So probably you have to look at it more like what Alibaba had, or Amazon had. Alibaba had, and obviously the IPO got delayed. And the way the new age, this is actually more new age if you were to compare it with the more lenders. And I think they're clearly focusing on more consumer lending and MSME to begin with, which is high growth, high margin. But I think it will take time, Prashant. You suddenly don't expect it to become 1 lakh crore AUM. It just has, for example, 30 people in collection. It will take a lot of time to build branches, get that infrastructure in place. Lending is a very different game.
So, Gurmeet, as of now, you don't see any major threat to some of the incumbent players, right? I'm just asking from an investor and a stock market angle. How do you approach the other players when such a large, perhaps disruptive player enters the market?
It could be margin dilutive in certain segments. I don't think so they're going to do mortgage immediately. So I don't think so, really banks have too much to. But few NBFCs, it could be margin dilutive in few pockets, let's say micro lab, bit of personal loan on a particular CIBIL score, or used car loans. They could be a little disruptive. Also in consumer durable, they would want to leverage that segment. But the market is too big, Sonia. That's what I'm saying. They will take probably some time to get to 50,000, 60,000 crore of loan book. So let's say to get to $10-15 billion, unless they do, inorganic acquisition, which, they are capable of. So I would subscribe to it thinking that this has the potential, right database, huge, very good team they are building. Very impressed with the team. Not only just Hitesh and Mr. Kamath, but I think the team they're trying to build on the ground is very good. So I would be an investor in it, but not from immediate gain perspective. I think it will take time. Lending business takes a lot of time.
All right. Hi, Gurmeet. Good morning. Gurmeet, just to press home the point, so in the near term, well, they'll have to still grow the business. But where do you think the risk will be more at a later date? Because this is a big company coming in there into the financial services space. Everyone's talking about the NBFC space. But do you think the AMC space actually will face a bigger threat because of the brand value that the conglomerate has?
Not really, Nigel. See, BlackRock also came in earlier, and they'll probably be more disruptive on passive side. Not as much as active. Active takes time. You need to build performance over a period of time. There is Bajaj Finserv already, which has just come in, and there are a host of others. So AMC business also takes time to get profitable. In fact, if you see out of 30 odd AMCs, barely 10, 12 are profitable. And probably the top 5 would take about 70-80% of the profit share. So I think all these businesses, they will incubate insurance, asset management, lending. They are backdated. They take time to get profitability. Also, the market would want to see return ratios, right? What the return ratios are. You ascribe 5 to a Bajaj or to 4.1 to a Chola on FY25 on 20-25% return ratios. So that takes time. The collection infrastructure takes time. But as I said, the focus is MSME and consumer lending. It's high margin. And they can grow it really fast, 30-40%. So they will be clubbed with, the new age guys more than the traditional NBFCs.
All right, Gurmeet, I think you have to run. So thank you very much for joining us. Appreciate you sort of joining us on the program. Sriram is with us, and so is Prakash. Sriram, from a near-term perspective, I think some 4,000 crores worth of selling is expected from passive funds.
Yeah, hi, Prashant. Good morning. Yes, you are right. In terms of an impact, Nifty and sensex benchmark passive funds will be selling aggregated in terms of dollar million. It amounts to roughly $500 million worth of selling in Jio services that we are likely to see. So in terms of the global indices, MSCI has already decided to JFS as a part of the standard in cap category. large because it's a neutral event, because passive buyers who are holding Reliance Industries will be entitled for JFS. With clarity on listing coming into place on Friday, FTSE indices also decided to retain JFS, Jio Financial Services in the FTSE Cap, All World and the other indices. So largely the selling impact is likely to be in the domestic funds. Passive basically.
Okay, got that, Sriram. We just have a little over a minute, I think, before the listing comes through. So Prakash Diwan, let me squeeze this in very quickly. I think the larger question is, can Jio Financial replicate the kind of success that they've seen in the telecom and the retail business, right? Because it's not so easy, as Gurmeet was also telling us earlier. What is your own view on how things could play out?
No, so absolutely, Sonia. I think financial services, especially when you enter the entire gamut of lending, asset management, insurance, there's lots that needs to be created in terms of the support system, and that is what organically takes time. Once that is in place, I think the kind of scale that they're starting off with will help them reach levels of a book or business that's probably taken much longer for a lot of the competitors to reach. So from that perspective, it's going to be money well spent. Whatever money you spend, the velocity of money, the way it's being used for building this business is going to be far more effective than a lot of other businesses. So I definitely feel for somebody who's wanting to participate in the Indian financialization story, there's no better way than participating in a JFS stock. So, that's what it gives you, with clear visibility, though not immediate, not short term, but in the medium to long term, it definitely offers much more than what you would probably buy into some other of the listed names. Of course, there'll always be questions around whether they'll be able to do it well and effectively and all, but I'm sure given their past track record, there's nothing much to doubt.
All right. I think there you go. That's the listing coming through 17 years after the last listing from the Reliance stable. That was back in 2006. I think we've got Jio Financial Services making it to the market at 262 rupees per share, which is exactly at the discovered price, which was 261.85. It's basically around 265 right now. You can see the top team, including Mr. Kamath there, ringing the bell, ringing the stock into the listed space. And there you go. Just like that, you've got one more stock from the Reliance stable out there in the market, listed, Jio Financial Services. So, as I said, it's been almost 2 decades. Reliance Petroleum was the IPO which came through in 2006. And that was the last one from the Reliance stable. And now you've got Jio Financial Services in the market. I think more pictures coming through at this point in time.
Well, big moment there. In fact, we have Jio Financial Services that has listed. And to give you a couple of data points, the market capitalization is around 1.68 lakh crore. It becomes the 32nd most valuable company on the Indian bourses itself in the first minute of listing. So that's one big takeaway out there. 32nd in terms of market capitalization, ranking on market capitalization. And for today, as well as the next few sessions, that's for the next 10 trading sessions, I think, the stock will be in the 5% circuit limit. So just keep that in mind as well.
So, just to actually take that point forward, Nigel, let me ask Sriram. Sriram, the rule says that the stock has got to, by the way, we will cut across to when I think there will be a sort of brief address, I think, maybe an opportunity for questions, so we'll cut across to it. But Sriram, it says for 2 days, it's got to trade 2 days without hitting a circuit, right? So that's today and tomorrow. And then on Wednesday evening, it can be removed from the indices, from the Nifty, etc. So that's a 5% circuit? Is that how this will work?
Correct. Right, Prashant, you are right. So provided it doesn't hit circuit today and tomorrow, it will be deleted from Nifty, sensex and other.
Oopsie.
Sorry, I think we lost the line there. Sriram, are you there? Okay, I think we lost it.
So just to tell our viewers that currently you have 51 stocks in the Nifty because of this corporate action. But in the next 2 days, if it doesn't hit circuit, Jio Financial Services will make its way out of the Nifty. That's because of the revision in rules that came about by the National Stock Exchange earlier this year itself. And it could possibly make a re-entry. But the re-entry could be at a little later date because first it needs to be eligible to trade in the F&O market. Then it will be followed by a re-entry into the Nifty. So that's the other clause in there, along with the other clause with regard to the average turnover that will be traded along with the market capitalization as well. Market capitalization, it fits the bill, but for it to get into the Nifty, it'll have to, get into the F&O market as well.
Nigel, the last review, the half-yearly review happened, I think, just last week. So the next one, 6 months out, maybe in February or whatever, right? Unless, of course, something else goes out and then they consider, it's happened before. According to eligibility, and the space, it can make its way back. Most surely, I think it will. I think Prakash is still with us. Prakash, first thoughts? We've got a new Reliance stock at about, 251 as we speak?
Yeah, and the first one with the Jio moniker. So, that's more exciting. So, and probably a couple of years back, nobody would have thought that Jio Telecom might not get listed as quickly as Jio Financial Services. So, this is what happens in markets. They're so dynamic. But, also given the fact that apart from this passive selling, selling by the passives, which is likely to be done to adjust their own weightages and all, you'll probably start seeing the stock stabilize in a while before people start allocating actively to the stock, and that's going to be interesting, Prashant. And I think by next Monday, same time, we'll probably be also much more well informed about the plans going ahead and the timelines possibly when Mr. Ambani addresses the AGM. So that's going to be the key thing. So till then, you probably just kind of let it settle and do its own thing. Yeah.
Also, Prakash, now every time Reliance reports their numbers, you will have a lot more of us sitting there analyzing the numbers, right? We'll have oil and gas, telecom, retail, and now JFS as well. So it's going to be a longer show perhaps. But jokes apart, the larger question, I guess, is, there will be a broad range of services that they will offer. And now with this listing, they've created the 5th largest financer in terms of capital and a direct contender against, these prominent names like Paytm, Bajaj Finance, etc. One last word from your end. Of course, more details awaited at the AGM. But from this 1.1 lakh crore book, how much do you think the growth can be for them? And what do you do with some of the other players now, the likes of Bajaj Finance, etc., as an investor?
So, I think it's going to be a bit too early to compare JFS with the likes of Bajaj Finance at this point in time. And, even going ahead, Sonia, JFS is likely to be a composite of quite a few things. Whereas, Bajaj Finance is probably only into consumer credit, largely, or you have a Paytm, which is more of a payment bank-led, platform-based lending. Jio could probably do much more than all of these put together. So there's going to be like a sum of parts, and there's going to be, in isolation, some of these focus businesses. So I think as a stock picker, you would be better off buying into a Jio Financial Services, because you really don't know which part of the business is likely to do well. So whether a Bajaj Finance has a phase which is very growth oriented, or whether a Paytm makes a comeback. But within Jio Financial Services, you would get lots of other businesses to be thrown in, and that makes it much more balanced. So I think it's going to be the perfect balanced growth vehicle for your exposure to financial services in India, undoubtedly. And to the question on how soon they can kind of leverage this size, I think the book will probably take time, and it's going to be, as I keep on saying, it's going to be much faster than what others have done to reach a certain scale. I would believe they'll probably do what Bajaj Finance has done in a matter of few years. Bajaj has taken a decade and a half of sorts to really grow. Same thing is for the asset management business. They could probably grow very soon, very fast, because of the focus on passive funds. You really don't need much of a head start in terms of performance, track records, and distribution networks and all that. You leverage on technology, leverage on your database, and that's how you grow. So all these businesses are going to be fast growth areas, very promising, very balanced. It's definitely something which people should take advantage of.
Okay, Prakash, thanks a lot for joining in. And that's the big headline right now. Jio Financial Services has finally debuted on the stock markets, creating the 5th largest financer in terms of capital. Let's slip into a quick break now. On the other side, Mitesh Thakkar joins in for some technical trades. Stay tuned. Welcome back to Bazaar Morning Call. It's absolutely flat for the market, so not too much on the headline index, but there are plenty of individual stocks that are moving around. Adani Group stocks are coming back, so just keep an eye out on them. Adani Enterprises, Adani Ports, all in the green right now. But Mitesh Thakkar is joining in. Mitesh, any interesting stocks on your radar? Something that, you can take as a positional trade on the upside through the course of the week, perhaps?
Yeah, good morning again. So I think, very clearly the market isn't going anywhere, but there is some action happening on the stock side. And one can look at Dixon Technologies. I think it was a move a couple of days back. Is again trying to break out on the hourly chart. So I would recommend buying here. Keep a stop at about levels of 47.70. Look for targets of around 49.40, 49.50 on the upside to begin with. And the other stock which possibly is giving some reversal on the intraday charts is Axis Bank. Keep a stop below 9.40. Look for targets of 9.60.
All right, Mitesh, thanks a lot for that. Let's do one thing. Let's slip into a quick break on that note. On the other side, our special segment is the economy. Lata will get chatting with Steve Englander of Standard Chartered and Robert Sokin of Citi to talk about the significant jump that we've seen in US yields. Stay tuned.